Hey guys, welcome to the presentation on IRS notice and resolution. You know, a lot of taxpayers and business owners receive a letter from the IRS. You know that feeling in your stomach, and you see the return address. And for most taxpayers, it's a feeling of fear, confusion, and the instinct to just pull back and pile the letter and deal with it later. Honestly, you do not want to do this. Really, the IRS is counting on that feeling. Every week that you don't respond is another week of compounded interest, accumulating penalties, and options that quietly close forever. But today, I'm going to show you what the right response looks like and what it's worth. If you look to the left, that's pretty much an IRS notice that a lot of taxpayers receive. Most people who get an IRS notice do the worst possible thing. They wait. The IRS is a bureaucracy with specific rules, timelines, and procedures. They know how to handle your notice. They've done it thousands of times, but a lot of taxpayers haven't. The best time to respond to an IRS notice was the day the letter arrived. The second best time is today. And honestly, the IRS is counting on you to know that most penalties could be eliminated, and most taxpayers do not know. There's something called the first time abatement, which it's a reasonable cause argument, scope limitations, and the taxpayers who pay the least on IRS notice are the ones who know that these three things exist. So three things that the IRS knows that most taxpayers don't, and I want you guys to really focus on this slide. The first thing is most penalties can be abated or eliminated entirely. I want you guys to really look at that again. Most penalties can be abated or eliminated entirely, but only if you act correctly, and only before you've waived your rights by missing the deadline. The second thing the IRS doesn't want taxpayers to know is responding wrong is often worse than not responding. What you volunteer, how you frame it, and when you include. All this could change your outcome. This is very important. And number three, the IRS gives you about 30 to 90 days to respond. After that, the proposed assessment becomes a bill, and most of your options close. And that is something you do not want to have. My name is Busayo Ogunsanya. I've been a CPA for 18 years. Also have a master's in taxation from Fordham University. I've been featured in the Wall Street Journal, Forbes, and also Crain's New York Business Magazine. I'm also the author of 8 published tax books. Also written about physicians, business owners, and different type of business items. Also, my prior corporate experience ranges from working at Ernst & Young, KKR, JP Morgan, before founding my CPA firm. And the most important thing I do is represent my clients in front of the IRS. IRS representation is some of the most time-sensitive work I do. The outcome depends almost entirely on how quickly and correct the response is built. So the reason I'm showing you guys this is these are my actual credentials. When you're dealing with the IRS, you need someone who's licensed, accountable, and has done this work for a long time. This is what this represents. On the right side, you also see my master's in taxation from Fordham University. Representing my clients in front of the IRS is something I take pride in. Would you want to work with an unlicensed doctor? Most likely, no. So the core idea is something I really want you guys to think about. Your tax preparer files what has happened after the year is closed. They can't go back and respond to a notice correctly if you waited past the deadline. What we're really focusing on is tax planning. We call it more the windshield approach, where we're looking forward before year ends. We're changing the outcome while there is time, coordinated entities and retirement planning. And this is very important as we go through the IRS tax resolutions and through your notice. So what I'm going to walk you guys through is show you what a difference looks like. So I had a client which is a small business owner. They received the IRS notice, the CP 2000, and the IRS alleged that my client had $47,000 in unreported income across 2 tax years. My client came to us close to 25 days after the notice date, and in reality, he waited too long. He believed it was the final tax bill, and he was about to pay $47,000 to make it go away. He had the documentation that disproved most of the alleged income. He just didn't know how to represent themselves. And in reality, nobody told him about the first time abatement. So what we did is we classified the notice correctly. It was a proposed change and not a final bill. I also drafted a structured response, applied for the first time abatement on my client's portions. So if you guys, when you think about this, imagine you had real cash flow going out of $47,000, but the reality is nobody told you what to do. So as you can say, my client was definitely relieved. And when you think about this, is tax savings are just numbers. They're decisions about your life. And when you think about that, is when you resolve IRS resolutions where there's tax notice and different items, what does this really mean actually for your life? When the notice is handled correctly, the IRS clock stops. There's no more letters, there's no more liens, no more levies on your bank account. The issue is behind you and not ahead of you, compounding every day. This is peace of mind, and peace of mind has real financial value. In terms of when you think about that, is you have a clean slate, which you can start over with the IRS, and also you have a peace of mind to know that this is the real number that you owe, and we could plan around that. So I've been a CPA for close to about 18 years, and also have masters in taxations. And there's roughly about 4 patterns I've noticed in terms of the clients that come to us. Pattern 1 is notice classification. For example, a CP 2000 is a proposed change, not a final bill. A CP 14 is a balance due notice. A CP 90 is a final notice before the levy. Each one requires a different response on a different timeline with different documentation. If you respond to a CP 2000 like it's a final bill and pay it, you may have just paid an amount you could have disputed. So you have to understand the classification of the notice. And responding to the wrong one, the wrong way, can expand the issue beyond the original scope. That is something you don't want to happen. Pattern number 2, penalty abatement. A lot of taxpayers really do not notice. The IRS first-time abatement program removes failure to file, failure to pay, and failure to deposit penalties for taxpayers with a clean prior compliance history. But the reality is, they're not going to tell you this exists. They don't put it in the notice, and most tax pay penalties that they didn't have to pay because nobody told them to ask. Also, there's reasonable cause arguments can eliminate penalties in additional situations. This is documented IRS procedure. Again, this is not a loophole. And this is pattern number 2, that if you don't understand all these items, you might be in a deep hole. Pattern number 3, and honestly, this is a very expensive one. Every deadline that passes closes a door that cannot be reopened. The IRS has notices as a response window, and it's typically 30 to 90-day window. So if you miss the window and the proposed assessment becomes a bill, this is very, very bad for you. And missing the next deadline, you waive your right to contest. Every week you wait is a week of compounded interest and compounded options that's lost. Pattern number 4, what not to say. As you guys know, this is very important. In any IRS examination, the scope is defined by the notice. When taxpayers volunteer additional information, additional years, additional issues, additional documentation the IRS didn't ask for, they are expanding the examination. Experienced representation knows exactly what to include and what not to send. That knowledge alone is often worth more than an engagement fee. So here's what I'm offering. In terms of our services, what we offer is the IRS Resolution Defense Package. The first step is really understanding why you received the notice, building a response strategy, and also a written response submitted by me, the CPA. In addition, what we will do is offer full IRS representation, look at the penalty abatement attempt, and also include a forward plan to prevent reoccurrence. I've been doing this for 18 years, and this is something very, very important to me. And when I think about this, it's the cash flow that's really going out the average taxpayer or business owner's hands. So right now, we're looking to work with taxpayers that have any IRS resolution or notice matters. And honestly, we try not to take a lot of clients every month because it takes roughly 30 to 60 days for us to really come through the financial details, respond to the IRS, make sure we have the proper documentation. And honestly, we're not looking to work with everyone. And I know we might not be a good fit for everyone, but our thought process is to make sure that you're working with the correct professional that could represent you so you have peace of mind. In reality, and I'm going to leave this to you. The IRS doesn't go away. A notice ignored becomes a lien. A lien ignored becomes a levy. And a levy really means a levy on your assets, your bank account, your credit cards, and even your U.S. passport. The right response, delivered correctly, can make a 30,000 notice disappear. And right now, I want you to click right here. And right now, we're looking to work with any taxpayers who has received any tax notices or resolutions letters, and honestly, just do not have the correct tax attorney or CPA representing them. And so, in terms of working with us, what you get is understanding where the notice is classified in the strategy. You receive a written IRS response, penalty abatement attempt, and representation through this process. So I want you guys to click on this link, and I look forward to hearing from you. Again, my name is Busayo Ogunsanya, and have a good day.